What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers. Up here on the left, we have the broad market comprised of SPY, the Qs, and IWM. After that, we check out Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. We have a quick announcement. We know it's quarantine time for pretty much everyone in the world right now, so if you want to make use of your time potentially a little bit better, we're offering a free one-on-one call. We're doing a little contest over on Instagram, so you can check out our page. You can see you can like either one of these two photos. The other way you can enter is to leave a like and drop a comment down below on this video. Make sure you're subscribed. That will also enter you into the contest, and we will announce the winner on the 30th of April. Hopefully we can go over some key things in terms of charting, potentially set up a strategy for you, and get you well on your way to a successful trading career. So if you're interested in that, go ahead and check out all that stuff. The members of our free newsletter got the heads up on this last week, so if you also want to get involved in that, there's the first link in the description. You can sign up for that free newsletter. Again, we're on Instagram, and we do have a free Discord server if you want to chat with myself and other traders in real time. Starting off on our SPY weekly chart, as always, a few key things to point out here. First of all, our support trend line, this white dotted line here, is still very much intact. It was not violated. Next key thing to point out is we printed a nice green bullish bar on the weekly chart here, and we came right into our resistance at 288.20. That's noteworthy just because we didn't see a topping tail form here. We didn't see an aggressive pullback off of that level. So to me, this means that we want to see some sideways consolidation and potentially a break next week, or even, even a slight pullback into the support trend line wouldn't be the worst thing in the world. We'll look at that on the daily chart. But the last thing I would like to point out as well is if we look at the Fibonacci's, which we talked about in last week's video, we were talking about that 50% retracement mark and how we came right up to it here on this weekly bar. We've now closed well above it. So to me, if there was a place for new sellers to come into the market after this big move to the downside, the 50% retracement mark is sort of where that would have happened. So now we've closed well above it. To me, we want to see a continuation to the upside. But again, we are open to all possibilities here. So we'll talk about both support and resistance on the daily chart. Alrighty, so on the daily chart, you can see that, again, that pullback into that support trend line here would be A-OK. Just a slight move off of this 288.20 resistance level and that 50 moving average on the daily chart as well. That would be fine in terms of a pullback and maintaining bullishness. Obviously, we have support here at 275.17. It has been, very, very noteworthy level. Look at all these touches in here, touch, resistance, and then support in here as well, forming almost a triple bottom on that day. Another key thing to point out here is that we have a gap that remains unfilled now to the downside here. So the low of Friday, which is 282.40, to the high of Thursday, which is at 280.03. So keep that in mind. There is a small gap that remains here. But normally, under the circumstances here, it would have been normal to see a full gap fill on this day. But because we only saw, whatever that might be, about a 50% gap fill on the day, that is another bullish sign to me that sellers weren't even able to push prices all the way back down to completely fill the gap. Buyers really stepped up, kept prices elevated. So to me, again, that's another check mark for the bulls. A next point of resistance above us is pretty much the $300 psychological number, as well as coinciding with that 200 SMA on the daily chart here. If we can get above that, any sort of miraculous breakout and continuation to the upside, we're looking at 313, just about the whole dollar here. You can see it acted as resistance on this first little dead cat bounce. Anything after that, we have 320.12, which has been a previous area of support in the chart over here. You can see there. And then really it's the all-time high up here at 339.08. Again, that's way away, but we're just covering all of these levels. To the downside, again, we talked about our 275.17 support. Our trend line should act as support, if we start to see a pullback into that level as well. So that should be a super support. But if it gives to the downside, we are looking at 263.02. Anything lower than that, we have 256 just about, and then lower than that, we have our 244.50 level. The Qs look even more bullish than SPY. You can see that they were sort of carried by Netflix and Amazon. We'll look at those later on in the video, but essentially just had a week of, rather than sideways consolidation, we saw pretty much a move straight up, obviously a big gap up on Tuesday there, and we're again maintaining that gap to the upside. Next area of resistance above us is going to be this level in here at 219.50. If we can get higher than that, we have our level at 223.83, and then from there you can see again, if we reference this historic piece of the chart, we have a gap that remains unfilled here to 229.28. So keep that in mind if we get up into this level and then start to see a push into the gap. Again, we could potentially fill it as there's very little resistance in that area all the way up to 229.28. To the downside, we have this sort of support zone now. This gap here has been repaired on the chart, so we're going to get rid of these actually. So there we go. We'll remove those as there, and now instead we have a gap that remains below us, unfortunately, from 206.35 to 202.95. So keep that in mind if we see a move back down here. Should offer some support at 206.35 if we start to fill the gap, though. Again, remember that we have a move all the way down here to 203 just about. Anything lower than that, we're looking at 198.30. Lower than that, 192.61. One thing I do want to point out on the Qs and just how they're pretty much acting as the leader right now in the market. Again, we talked about that being because of Netflix and Amazon. But if we remember, we were looking at that 50% retracement as an area of resistance. Well, the Qs have not only closed above the 50%, they are now well above the 61.8. And when that tends to happen, this can be considered a secure low. Once we close above that 61.8, it's very unlikely that price will come all the way back down and do a retracement to the low of the move. So keep that in mind. In case you're, hoping for some drastic move all the way back down here to the lows, very unlikely at this point. Alrighty, so even IWM has started to perk up a little bit. We'll get rid of this resistance trend line. It's not really in play anymore. Our support trend line is very, still secure, hasn't been violated in any way. A pullback into it would be fine. Again, sort of looking like the IWM and small caps are lagging compared to the rest of the market, which is just fine. If you're just trading this in terms of, trading the movement here, our supports and resistances are all mapped out. We filled the gap up here quite nicely, so that was nice to see. Got a bit of a gap reversal. Now this chart looks pretty sloppy, to be honest with you. There is a gap that remains below Friday's candle, so the low of Friday to the high of Thursday. That gap fill closes at 118.42. Anything lower than that, again, we're looking for that support trend line to come into play, but if it doesn't and it gives, we're looking at 110.73. After that, 106.76 to the upside, though, we're forming what we tend to call a bit of a pressure cooker here, where the more times we can test this 124 level, the more times we test it, the more pressure we build up below it. When the breakout does happen, it should be very easy for a surge to happen to the upside, where we might come into contact with that 50 SMA on the daily here, or our next resistance level up here at 136.20. Anything higher than that, again, a gap to be filled here to 141.01. So if you've made it to this point in the video, I'm sure you're enjoying the analysis so far. Be sure to hit the thumbs up button. I greatly would appreciate it, and I think the YouTube algorithm would as well. Also, if you're interested in that contest we talked about in the beginning of the video for the one-on-one call, all you got to do is subscribe, like, and leave a comment down below. Without further ado, let's hop into Apple. So on Apple, you can see we've essentially consolidated 4 days in a row in this range here from 277.83 just about to 286.50 if we want to play a quarter there. We're also sitting above our 50 SMA on the daily chart now, which is a bullish sign, and we did print a hammer candle on Friday. So to me, the move would want to be a breakout over this balance area as opposed to downwards. In terms of targets, normally when we see a sort of balance area like this develop, we target double the range to the upside, so that would look something like that. In terms of a whole dollar number, that would be somewhere around 298 to the upside. We can play the $300 psychological resistance as well to the upside, but if we break out over that and continue, we're looking at our sort of topping. You can see 1, 2, 3 triple top here at 303.73. Higher than that, we have 314.07, and then up here, the all-time high, of course, 327.39. To the downside, though, if we break down out of that range and the 50 SMA gives, we're looking for less of a doubling of the range to the downside, but rather a gap fill to the high of this candle here, which happens right around 273.40 just about. Anything to the downside and continuation further lower, we're looking at 256.35, which will start to coincide with that, our 200 SMA rather will start to coincide with our 256 level. So look for a super support there. First touch bounce. Anything lower, we have 250.29 and then 239.42. So just like we talked about in last week's video, we saw the explosive movement out of this range that we were sort of trapped in to the upside. So we saw a beautiful move to the upside, breaking through our all-time high resistance up here at 392.95. You can see we had 1, 2, 3, 4 quadruple top there, and we finally broke it to the upside. Got nice continuation, but we did print a inverted hammer as well as a pullback candle here on Thursday, Friday. So the key things I'm sort of watching for here are, we obviously have our new resistance up here. And then we have a support that's sort of forming somewhere in this area around 414.40 just about. I'm not really going to be touching this one with earnings coming up early into next week, but after earnings pass, potentially looking at a move in, more of a pullback here. I think any sort of pullback off of this explosive move should be viable for a move back up to, sort of test that all-time high. If it doesn't do that, though, we should see at least some follow through to the upside. To the downside, though, we are covered with support. If none of that does happen, we have 392.95, our previous all-time high. Anything lower than that, this should certainly offer a strong support zone if we were to come back all the way down into it. That's 380 to 375.50 just about. You can see all the times we got rejected. Now that we have a clean break to the upside, any sort of retest of that would be a strong support. Tesla also benefiting from a nice gap up early on in the week on Tuesday. You can see we have this new gap that remains below us. The gap fills and closes all the way down here at 648.92. So 649 if you want to play a round number. 50 SMA is also sitting at that level, so look for a super support to be formed there if we do come down and test it. To the upside, though, you can see we broke out of this 3-day range, or started to anyways. We're pulling back. We do want to see this act as support here at 743. We see support here. We can continue up higher. Areas to look at on the upside would be somewhere in here. You can see all the times this acted as resistance. That's around $818.64. Anything higher than that, we can continue to just pick out some of these key levels, 863.11, and then higher than that, we can sort of look at some of these areas in here. Probably this would act as resistance before coming into the all-time high at 911.82 as well. So BABA is very much in play right now. You can see we're getting rejected off of our resistance trend line. To me, we would want to see a move lower and form a new support or confirm a support around here, which would be 207.50 just about. So look for a pullback all the way into that level. If we continue to break down lower, we're looking for our next support to come into play at 202, which is going to coincide with that 50 SMA on the daily chart. Again, look for a super support, first touch bounce off of that. If we continue lower, we have support, sort of a zone down here between 195.60 and 193.90. To the upside, though, if we can find support at this 207.50 and then reverse out of it, we're looking for our first resistance at 214.96, 215 to play a round number there. Anything higher than that, and we're going to sort of see a move up into here, which would be, sort of where we saw some of this choppiness and some of these highs in here form, which is around 224.12. So Facebook not seeing as much benefit as some of our other FANG stocks, if you will, on Tuesday's gap up. Instead, we sort of got rejected at that 50 SMA, got rejected again on Friday at that 50 SMA. So here the move is to wait for a break of the 50 SMA to see a move into our next resistance at 183.95, 184 if you want to play a round number. Anything higher than that, we have our 200 SMA sort of midway between our next resistance point here. That's sitting currently right around 191.76, as you can see there. Higher than that, we have 197, and then our resistance trend line, which is coming down from up here. Should we see any sort of pullback, since this one is sort of starting to lag compared to the rest of the market, we're looking for a move down lower into our 170.25 support. Anything lower than that, we're sort of going to be getting into the zone of our support trend line. But if that gives, next move down below would be at 159.32. So Nvidia has been doing this interesting thing for the past week where we can see, obviously, we had the big gap up on Tuesday, and then we form an inside bar, another gap up, and now we've consolidated to essentially another inside bar. So what we're waiting for here is a breakout of this 2-day range. If it does the same thing as it did here, then obviously we're looking for a move just about double to the upside here, which puts us around 315, 316, just about the all-time high. You can see, as noted up in here. That's resistance. To the downside, though, if we break down out of this 2-day range, we're looking for support to come into play at 272.35. Anything lower than that, we're looking at our 50 SMA coinciding with this 259.50 level, so super support there, first touch bounce. If it breaks, 241.26. So Microsoft sort of following the closest of all to the Qs. You can see we are continuing to put in higher highs and higher lows on the daily chart here. We are now filling the gap that was here. That being said, we do have a gap that remains down below, so that's been noted here. Gap fills at 165.50 just about. Based on the hammer, I think we want to see some sideways consolidation. I don't think, buyers can continue at this rate of speed to push things all the way up into our next resistance at 187.75, early on in the week, but certainly some sideways consolidation. It doesn't look like we want to break down below our 177.21 support based on, buyers buying it back up. But if we do, again, 174.21 is also support here based on our previous highs, as well as resistance in here, and then forms support on Thursday. And last but not least, we have Amazon, which has essentially pulled all of the tech and Qs higher. The NASDAQ obviously moving much higher based on some of this stuff and what was going on Netflix. So making new all-time highs up here at 2461. We do have, it looks like a pullback area sort of in this area of 2315. And from there, it's just going to be a retest of our previous all-time high back here at 2183.33. So I'd say anything here is sort of buyable on the pullback just because of all the momentum that's been going on. I think people are waiting for a pullback to get in if they missed, so potentially look for that to happen. We do have sort of this dragonfly doji forming here, but again, with earnings coming up soon, I think based on, if we're trading options here, I think we want to wait for the volatility to settle down after that event happens, and then we can sort of look for an entry point there. To the upside, if we're going into blue sky territories, again, on this one, it's going to be whole dollars and, the $5 marks, the $10 marks to the upside, as well as any intraday levels that do form. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comments section or by leaving the video a thumbs up. If you're interested in the contest for the free one-on-one call giveaway, then be sure to leave the video a comment, like, and subscribe to the channel, or you can enter on Instagram by following the rules on either of those two posts that we mentioned in the intro. With that being said, I wish you a green trading week and stay safe.